Hello everyone, welcome to EduTap and welcome to today's session. So today we are going to discuss a very important scheme, that is the Sovereign Gold Bond Scheme 2023-24 that has been announced by the Government of India. The Reserve Bank of India has released the notification and the press release for this very important scheme. So today let's have the complete clarity about this scheme and let's understand the important dimensions of this scheme that can come in the examination. Okay. So now before starting with this very important scheme, do subscribe to our YouTube channel and join our Telegram channel for the PDF of this session. So now coming to the Sovereign Gold Bond Scheme, but before that, see, the physical gold in our country, the physical gold is considered as the safe asset and it is considered as the safe investment. Most of the people in our country, they do not have the financial awareness and they do not have the knowledge of the financial markets, of the stock market, of the bond market. So they consider the gold is considered as the safe asset, as the safe investment, and the families, they usually buy the gold for their functions also, as well as they buy the gold for their investment. Now the Government of India wanted to reduce the demand for the physical gold because in our country there is huge demand for the physical gold. So to reduce the demand for the physical gold, the Government of India released the Sovereign Gold Bond Scheme in November 2015. Now the sovereign gold bond, they are the substitutes for holding the physical gold and they are even better investment than having the physical gold. In the physical gold, when you go to the jeweler's shop, you have to give the making charges. The minimum making charges are 5%. Okay, so you have to give the making charges. You also have to give the GST. Then you also have to, like, if you are having a lot of gold, you will have to take a locker, so you will have to give the locker charges. Okay, after, like, if you are keeping the gold for a long term, then you will also have to give the capital gain tax because the value of the gold value is appreciating. So on that appreciated value, because you are making the profits, so you have to give the capital gain tax also. But in the sovereign gold bond, there are many benefits that were provided. Okay, if you buy this bond, instead of buying the gold bond, instead of buying the physical gold, if you are buying the bond, you do not have to give the making charges because it is not the physical gold now. You are not buying any jewelry or such kind of thing. You are buying the bond, so there are no making charges. You do not have to give the GST. You do not have to keep any locker because you can keep the sovereign gold bond in the demat form. So you do not have to give any locker charges. You do not have to give the capital gain tax. So if you are keeping the sovereign gold bond for the complete maturity, so you will not have to give the capital gain tax. As well as you will get on this bond, you will also get the interest rate from the Government of India. So you can understand that so many benefits were provided for the sovereign gold bond. So this became a very lucrative kind of bond for the people. So the SGB's sovereign gold bonds are the government securities that are denominated in the grams of gold, and that's why they are considered a substitute for holding the physical gold. Okay, so the value of the sovereign gold bond depends on the value of the gold. So the value of the sovereign gold bond depends on the value of the gold. So it is as good as keeping the physical gold with yourself. So now I hope you have got the brief idea of the sovereign gold bond. They are announced by the Government of India, and the Reserve Bank of India issues the sovereign gold bond on behalf of the Government of India. So they are very trustworthy because they are backed by the Government of India. So you are getting so many benefits. Now we will understand these benefits in detail, but you are getting so many benefits on this sovereign gold bond. So they are very lucrative. Okay. So having the brief understanding, now let's understand the news article. So the Government of India has announced the Sovereign Gold Bond Scheme 2023-24. That is for this financial year. The Government of India has announced the Sovereign Gold Bond Scheme, and this scheme, Sovereign Gold Bond for 2023-24, launched in two tranches, the Series 1 and the Series 2. The Series 1 is made available. Okay. This has been opened, and from June 19th, this is open for subscription. So this is a very lucrative, this is a very good scheme that was opened by the Government of India, and this is open for the 2023-24. So the sovereign gold bond scheme 2023-24 series 1 has been opened for subscription during the June 19 to June 23, 2023. So I hope you understand that it has been opened in 2 tranches. Now coming to the dimensions of the scheme that you need to remember and understand from the examination point of view. Okay, so let's cover each dimension very clearly. So the product name is Sovereign Gold Bond Scheme 2023-24. This is issued by the Reserve Bank of India on behalf of the Government of India. So the Government of India usually issues the bond, that are the government securities. The Government of India is issuing the bond, and the Government of India is getting the money from the investors. On this money, the Government of India has to give the interest rate, and after the maturity, the Government of India returns the money back to the investors. Okay, so this is the idea of the bond. So the sovereign gold bond, in this also, to buy the sovereign gold bond, the investors will have to give the money, and the sovereign gold bond, they are having the underlying value attached with the gold. So the gold value is also increasing, so the value of the sovereign gold bond will also increase, as well as you will get the interest rate also. On maturity, the Government of India will return the value of the gold. Okay, so the sovereign gold bonds will be restricted for sale to the resident individuals. So they are the eligible candidates, they are the eligible investors in the sovereign gold bond category. That are the resident individuals, the Hindu undivided families, the trust, universities, and the charitable institutions. Okay, the denomination. Now the sovereign gold bond, they will be denominated in multiples of gram of gold with a basic unit of 1 gram. So you can understand that the denomination, like the sovereign gold bond, they are dependent on the value of the 1 gram of gold, or they are dependent on the value of the gram of gold. Tenor. So the tenor of the sovereign gold bond will be for a period of 8 years with an option of premature redemption after 5th year to be exercised on the date which interest is payable. So you can understand that the sovereign gold bond, like all the bonds, have some period. So the sovereign gold bond have a period of 8 years, and after 5 years you can do the premature redemption. But if you are doing the premature redemption, you will not get the capital gain tax redemption. Okay, you will not get the capital gain tax exemption. So you will have to complete the 8 years, the complete maturity, for getting the capital gain tax exemption. Okay, so minimum size, the minimum permissible investment will be 1 gram of gold, because the families like you and me, the people like you and me, will be going for buying the sovereign gold bond. Like the resident individuals, the individuals are buying the sovereign gold bond, so they cannot have a lot of money, they do not have a lot of money. So the minimum permissible investment will be 1 gram of gold, and the maximum limit in a year, for a financial year, the maximum limit for the individuals is 4 kg, the maximum limit for the Hindu undivided family is 4 kg, and the maximum limit for the trust, charitable institutions, and the universities, the maximum limit is 20 kg for trust and similar entities as per the fiscal year. So this is the limit for a financial year, that is from April 2023 to March 2024. This is the limit. Okay, so the annual ceiling is this. This will include the sovereign gold bonds subscribed under the different tranches, the 2 tranches, the 2 series that I have shown you, and those purchased from the secondary market also. You can purchase it from the secondary market also. So now coming to the next dimensions, the joint holder. So in the joint holding, the investment limit of the 4 kg will be applicable to the first applicant. Issue price. Now the main thing here is to understand the issue price. I have told you again and again that the sovereign gold bond is dependent on the price of the gold. So when the sovereign gold bond is issued, let's say for our easy understanding, let's say the sovereign gold bond is issued in 2020. So the on 20th June 2020. So the price of the gold before this date, like on 18th, on 17th, 18th, 19th, the price of the gold for the 3 days will be taken. The price of the gold will be taken for the 3 days, and the average of the price will be done, and on that average the sovereign gold bond price will depend. And the price of the gold is as per what? So we are taking the price of the gold. We are asking the price from the gold from the jewelers, that okay, how much price are you selling the gold, or how much price are you selling the jewelry? No, we are taking this price for the previous 3 days. We are taking the price from the Indian Bullion Jewelers and Jewelers Association Limited. So the price of sovereign gold bond will be a fixed will be fixed in Indian rupees on the basis of the simple average of the closing price of the gold of 999 purity that is published by the Indian Bullion and Jewellers Association Limited for the last 3 working days of the week preceding the subscription period. Preceding the subscription period, the issue price of the SGBs will be less by rupees 50 per gram for the investors that are applying online, that are doing the subscription online, and they are paying through the digital mode. So for them, rupees 50 less will be the benefit. So I hope you have understood that how the price for the sovereign gold bond is determined. Payment option, now you can pay through the cash, but there is a limit for the payment through the cash, that is up to a maximum of rupees 20,000. Demand draft, through the check also you can pay, or you can pay through the electronic banking. If you are paying through the digital mode, you can understand that you are going to get the sovereign gold bond at less, like rupees 50 less. Okay. So the issuance form, the SGBs will be issued as Government of India stock. So they are issued through by the Reserve Bank of India on behalf of the Government of India. So the SGBs will be issued by the Reserve Bank of India on behalf of the Government of India as Government of India stock under the Government Securities Act 2006. So the investors will be issued a certificate of holding. So sovereign gold bond is what? It is just a piece of paper, we can say. It is a certificate of holding for the sovereign gold bond. The SGBs will be eligible for conversion into the demat form. You can keep it in the demat form. You do not have to be wary about it that you are keeping it at home or where should I keep it. So you can keep it in the demat form. Redemption price. Now when you are getting, like after 8 years, let's say 2028, in 2028, the maturity of the sovereign gold bond is happening. The sovereign gold bond that you purchase, the maturity of that sovereign gold bond is happening. In 2028, you are getting the money back. Okay, so you are going to get the price of the sovereign gold bond, the price of the sovereign gold bond, or the redemption price. The price that you will get will be the price of the gold, that is for the 3 days. So the redemption is going to happen on 20th June 2028. Let's say 20th June 2028, the maturity of the sovereign gold bond has happened, and you are going to get the redemption price, that is the price of the gold for the previous 3 days, for the 17th, 18th, 19th June 2028. So on that basis, you are going to get the redemption price. So the redemption price will be in Indian rupees, okay, based on the simple average of the closing price of gold of 999 purity of the previous 3 working days, and this is again published by the Indian Bullion and Jewellers Association Limited, because this is the association that from which the price of the gold is taken. Okay, so and this is before the redemption, like before the maturity, before the date of the maturity, for the 3 days the average of the price of gold is taken, and that is published by the IBGA Limited. Okay, on that basis the price is given to the people. So you can understand that in 8 years you are going to get the higher price of the gold, because in 8 years the gold must be appreciating, the value of the gold must be appreciating. So you are going to get the higher value of the gold. Okay, without even holding the physical gold, you are going to get the value of the higher value of the gold. So sales channel, from where you can buy the sovereign gold bond, do you have to go to the Reserve Bank of India, to the Mumbai, or to the regional offices? No, you can have the sovereign gold bonds will be sold through the scheduled commercial banks, Stock Holding Corporation of India Limited, Clearing Corporation of India Limited, designated post offices, as well as the stock exchanges, the National Stock Exchange, the Bombay Stock Exchange, either directly or through agents. The exemption, like that also understand that except the exception are small finance banks, they cannot sell the sovereign gold bond, payment banks cannot sell the sovereign gold bond, and the regional rural banks cannot sell the sovereign gold bond. Interest rate, now I have told you that on the sovereign gold bonds you are also getting the interest rate, okay, because they are the bonds. So you are getting the fixed interest rate of 2.50 for 1 year. So for 2020, okay, for 2021, for 8 years, for per year you are going to get 2.50 of the interest rate that will be payable semi-annually. That is for first 6 months you are getting 1.25%. For the next 6 months you are getting 1.25%. Okay, so the investors will be compensated at a fixed rate of 2.50% per annum for 1 year, payable semi-annually on the nominal value, on the value of the sovereign gold bond. The SGBs, now the sovereign gold bonds, they can be used as the collateral for loans. Like you are going to the bank, you are keeping your gold and you are taking the loan against that gold. You keep the gold in girvi kind of thing now. So similarly, the sovereign gold bonds, they will be treated at par with the physical gold for the loans, for keeping the sovereign gold bonds as the collateral for the loans. So know your customer. Now whenever you are buying the bonds, or whenever you are buying any kind of security, whenever you are opening any demat account, whenever you are opening savings account, current account, you have to do the KYC. So in this case also, for the sovereign gold bond also, you have to do the KYC. Okay, know your customer, you have to verify yourself. Tax treatment. So I have told you that the capital gains tax will be exempted. You will not have to give the tax on the profits, because your gold value, now in 8 years your gold must have appreciated by a lot. You must have gained like good profits. So on that profits you do not have to give the capital gain tax. Okay, but you will have to give the tax on the interest that you are getting on the sovereign gold bond. Okay, and capital gain tax exemption is not provided if you are doing the premature redemption. Okay, you have to keep the sovereign gold bond for 8 years for completion of the maturity, then you are going to get the capital gain tax exemption. Remember this very clearly. So the SGBs shall be eligible for trading in the secondary market, and that's why they are considered liquid. In any kind of trouble situation, you can sell the sovereign gold bond in secondary market. Sovereign gold bonds acquired by the banks. Now the bonds that are released by the government, that is the government securities, they are kept under the by the banks, they are kept under the SLR securities. Okay, statutory liquidity ratio. So statutory liquidity ratio is a ratio of the deposits, we can say net demand and time liabilities deposits of the bank. So from that, a percentage the bank has to keep with itself. Okay, a percentage of the bank, so 18% the bank has to keep with itself. 18% of the money the bank has to keep with itself. In this 18%, the bank can keep in the cash form, in the gold form, and in the government securities form. In any of these forms, the SLR has to be kept by the bank. So the SGBs, that is the sovereign gold bond, they are also the government securities, because they are issued on behalf of the government of India. So the SGBs, that is the sovereign gold bond, they should also be counted towards the statutory liquidity ratio. I hope you have understood this very clearly. Commission, so the scheduled commercial banks, the agents that are selling the sovereign gold bond, so they will get the commission. You can read this, not very important, but you can just go through it, just read through it. Okay, so the commission for distribution of the sovereign gold bond shall be paid at the rate of 1% of the total subscription received by the receiving offices. And the receiving offices shall share at least 50% of the commission so received with the agents. Okay, so this is the commission. Now coming to the benefits of the sovereign gold bond. First of all, they are good long-term investment. They are safe long-term investment. The gold prices, you know, they will be appreciated. So you know that, okay, the value is going to be high. There is no risk of purity, because it is the IBJA that is issuing the price. And here no physical gold is directly involved, just the price of the gold is involved. Just on the basis of the price of the physical gold, the sovereign gold bonds are sold. So there is no physical gold that is involved, so there is no risk to purity. When you are going to a new jeweler, you are afraid that what if this jeweler is not trustworthy, what if the jeweler cheat and ran away. So this kind of trouble comes. No risk of default, because it is backed by the government of India. No capital gain tax. If you are keeping the sovereign gold bond for 8 years, there will be no capital gain tax. Sovereign gold bonds are traded on exchanges in the secondary market, so they are highly liquid, unlike the physical gold. Physical gold is also liquid, we can say, but the sovereign gold bonds are also very liquid. So you can remember this. Investors get 2.5% interest on investment each year, that is payable semi-annually, that is 1.25%. In every 6 months you are getting. See, can be pledged as collateral if one seeks a loan. So you can get the loan keeping the sovereign gold bond as collateral. Retail investors get sovereign gold bond on discount if the application is made online. So you can understand that the retail investors, they can get the discount like rupees 50. It was said na, rupees 50 on the issue price, rupees 50 you have to pay less if you are paying through the digital mode. So now coming to the first question, now I hope you can easily answer these questions. This is the first question. The upper limit on the investment for the individuals you have to tell. Very easy it is. Now coming to the second question, which of the following statements is incorporated with respect to the above scheme, that is sovereign gold bond scheme? So here I hope you will be easily able to answer this question. And the last question is regarding the which of the following cannot sell bond under above scheme. So under the sovereign gold bond scheme, which cannot sell the bond? So you have to tell this. Here the options, do not see the options, just try to answer the question directly. Okay, it is 4 kg, 20 kg, 5 kg, 8 kg, try to understand that. Okay. So now coming to a big announcement from EduTap that we have brought for you the comprehensive guide for RBI, NABARD and SEBI. So through a single guidebook you can get all your common queries answered. If you want to know about the syllabus, even the upgradation of the syllabus that has happened, so the upgraded syllabus is provided. So you can get the complete syllabus. You do not have to visit different websites, different links, as well as if you want to know about the sources for the preparation in the examination, as well as the previous year questions are also provided for your practice, so you can see the previous year questions also. So this is a comprehensive complete guidebook where you are getting all your common queries answered, and this is made absolutely free of cost to save your time, to save your efforts, and you can easily download these guidebooks. The link is provided in the description box below, so do download these guidebooks. Now thank you very much. If you have any query, you can comment down below, as well as you can mail us here or you can contact us through this number. Thank you very much everyone.